The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Geoca, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Geoca.
Morning. Welcome to the Max Out Savings Show. I'm Ted Geoca, and we're talking savings, investments, and your retirement here on the Max Out Savings Show. Our show is all about building up wealth, understanding the world today, and dealing with it and managing through it, managing through 30 years of retirement. How do you deal with ups and downs, wars, depressions, recessions, economic booms? Things are always changing. How do you get through that? How do you build up wealth? How do people become millionaires? We really talk about it on the show. And we always talk about the simplest way to become a millionaire is to simply put away 10% plus the company match into your savings plan, and save aggressively, and then conservatively manage it. That's how it all starts. We deal a lot with retirement, but we don't manage 401ks. We manage retirement money at Max Out Savings Advisors, trust, those type of things, long-term assets. But we always try to start the show talking about this because this is where it all starts. This is where it all comes from. This is where it all is built up. It comes out of these savings programs that you start when you're young and you build up your wealth. And then you let it grow. The power of compounding, Benjamin Franklin said it was the most powerful force on earth. Because it constantly grows. And we want you your wealth to constantly get bigger. And this is the way to do it. You get a tax deduction when you put the money in there. If it's in just a regular 401k plan, you don't get it in a Roth. But once it's in there, you get the tax deduction. The money grows tax-free and builds up wealth. And then when you retire, you take it out, you pay the taxes, then typically at a lower rate. And that's how you build up wealth. Oh, and by the way, today we're going to be live on Facebook, on KNTH's Facebook website. We got the video up and running now. We're going to be on YouTube. So the show is really growing, and things are really starting to happen. So we've been on for over 20 years. It's one of Houston's most popular shows, but we've not gone video, but we had so much demand for video, we decided to give it a try. And so this is our first live video show. And again, save aggressively, invest conservatively. So what do we do? What do we do in a world today? We have wars going on. We have a war. The war ended last week. It started up. In the world today, the wars typically, what they do is between big countries is the wars are fought on weekends, because that way you don't upset the financial markets in the interim. And we saw that this week when everything was fine. We had peace, and then the Iranians shot up something, and we said we're going to do something about it. And we didn't announce that we'd done something about it till about 30 minutes after the market closed for the weekend, so they have time to fight the battle till we get the I hate to be this cynical, but until the markets open, at 8:30 Monday morning, and so what'll happen is about 7:45, the straits will be open and the peace deal will be back on, and it just, I don't even know what to say about this Iran war, but we'll see what happens. But it's driven up oil prices. It's driven up inflation, and now we're hearing that inflation could go lower here. But which it is, oil prices have dropped. The oil fell under $70 a barrel. But a couple things we want to cover here today is, look, when this whole started, oil was around $60, $58. Everyone thought it was going lower. The problem is we've used up we've used up a good portion of our strategic petroleum reserve, our inventories, that are stored out there in many countries. We're not in bad shape here. The United States, we went through this like it didn't even happen because we've got an enormous amount of oil production. We started exporting more of our oil and our gasoline and our diesel fuel and the jet fuel overseas to help out the Europeans and particularly the Asians who don't have production themselves. But the Europeans and the Asians, they drained out all their supplies. They drained their strategic petroleum reserves. They drained, the storage they had in the air above ground because they had shortages. They had shortages in India. They had shortages in Thailand. They had shortages much of Asia. And so it really hurt those countries. And so now oil's coming back, going down. It's under 70. But again, these strategic stockpiles have got to be rebuilt. And this is going to take time. This is going to increase the demand for oil around the world for several years. Quite a bit of our oil from our stockpiles wasn't really sold. It was kind of lent out. So it's like, okay, we'll give you 1 million barrels of oil if you put it in by, this time about in the next year, you put the oil back into the strategic petroleum reserve. And so this is going to take time. There's also shortages of fuels. There's shortage of jet fuel, diesel fuel, gasoline. And so we're going to see that coming down. Now, we have an inflation problem in the country, and we want to kind of cover some of this stuff today. Is the Fed? We have a new Fed governor, so these things are kind of all coming in now. Trump is saying inflation's going down. What we're saying on the show, we've been saying a couple things. If you look at past history in the stock markets, when inflation strikes, corporate America's margins don't go up. And that's just their profits. Their profit margins don't go up because, they're trying to hold the line. They don't really want to raise prices. In the world today, many big companies are really run by financial types. They're not engineers. This is a big shift that's happening in the United States. We're shifting from the financial guys running the company to the engineers running the company. Take a look at what Elon Musk has done at Tesla, at SpaceX, and other things where you get engineers running the company, and versus. But the financial guys go, oh, oil's going up. Well, let's raise our prices. Well, they can raise their prices more, even if oil's not a big input. They say, why did you raise prices? Oil prices have gone up, and so their margins keep going up. And so this is a problem. And so I suspect with oil prices going down, these financial guys, look, they've got to hit their numbers for the quarter. And Wall Street's watching closely. And so they have to keep their numbers up. So they're not going to be cutting prices back down to where they were. If oil goes up and it goes right back down to exactly where, don't expect these prices to come down because they're not. They need those margins to appease Wall Street. And so that inflation is embedded in the system. I think 20 or 30 years ago, it'd really be a different story, but that's not the world we live in today. And so, in addition, we also have other areas of inflation. If we look at this week, Apple raised prices on their MacBook Airs, on their iPads, and different things. In some cases, $200, $300, $400 a unit on that. Again, saying, look, the DRAM prices are going up, and there's nothing we can do. See, well, Ted, this is a problem, and I'll tell you why this is a big problem for inflation. It's like for the phones, they're going to have to raise the prices in the phone because again, these phones use memory when it's got 13 DRAM or whatever it is in your phone. I forget how they typically do it, but in the one that has more memory is a little more expensive. You know how that. Well, it's one thing if my phone goes up $200, I'm not real happy about it. But if I have a family with 5 people and each of those phones go up $200 and my kids all want iPhones, all of a sudden I'm out another $1,000. Okay. And that $1,000 is probably more than the gas price increases for many people out there. And so but keep in mind, it's not just in the iPad and the MacBook Airs, but it's going to be in the Hewlett Packard, the Dell computers too. It's going to be in the in the Apple iPhones. It's going to be in the Samsung iPhones, in the Samsung phones. All of them have memory. What about your games? Yeah, the gaming consoles have a lot of memory in them. Those are all going up. And so this is spreading out there. It's pushing up the price of that. It's pushing up the price of semiconductors for other chips out there as well. For capacitors, that's a big shortage of capacitors. Well, capacitors are in everything out there, from your refrigerator over to your automobile. Again, the price of everything is going up. We live in such an electronics world. And what's happened with inflation over the last 30, 40 years? Let me take a sip of water here. You can now see me because I'm on the video. Over the last 30 or 40 years, one of the biggest drivers for deflation has been electronic devices, because it was real simple. Every time I go out and buy a computer, it's like $900, $1,000. It's been that way for 20 years, for at least 10, 15 years. But that computer every year has more memory in it. It has faster processors in it. So the government goes, well, this is a better computer. So actually, Ted, you're not paying the same price for a computer every year. Your price of your computer is going down every single year. So this is deflation. So when we're calculating the inflation numbers, your computers are actually declining in price. I'm like, wait a minute, I'm paying the same price. He goes, it's faster. Well, I need that now to get the same things I had in the past. But that doesn't make any difference. So your computers have been going down in price. This has been putting a cap on inflation. Well, that's all come to an end with this shortage of DRAM, with the shortage of the other memories, with the shortage of the capacitors, with the shortage of the chips, with the microprocessors going up in price, because now these microprocessors can be used for AI servers as well as my computer at the office, and so, or the one in your home. And so this is causing inflation to go up. So the Fed is still dealing with inflation out there. It's still a big issue, and it's not going away. Now, this is going to have effects on the market. This is why we've seen interest rates go up to some extent. So where do we go from here? Now, we want to discuss that after this quick break right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Geoca will return shortly. To speak with Ted Geoca now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
I'm Ted Geoca, and I approve this message.
Inflation, instability in the market, bonds, precious metals, oil and gas, and lack of old-fashioned cash puts your retirement at risk. It takes a different type of portfolio to deal with these issues, and that's where Ted Geoca can come in, and he can help. Go to MaxOutSavings.com and schedule some time with Ted. That's MaxOutSavings.com. And listen to the Max Out Savings Show every Saturday at 10 a.m. on AM 1070 and FM 103.3. The Answer.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. So how does having a sale work in unison with the reason for the day off? Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
In the 1970s, the big song was the Bee Gees' Stayed Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Geoca of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
We return now to the Max Out Savings Show. Here's Ted Geoca.
Welcome back to the Max Out Savings Show. Talking savings, investments in your retirement. Talk about inflation. Inflation's not going to go away, but a couple things I want you to understand is it's changing to some extent. Well, right now, we have the Federal Reserve Chairman, Kevin Warsh, our new Federal Reserve Chairman. I think this is a big deal. I think Wall Street is just slowly catching on to this. He is going to change things. Every Fed governor is somewhat different in a way, and Kevin Warsh is no different. I mean, put yourself in Kevin Warsh's situation. He got $38 trillion worth of debt. Your debt's going up at the rate of about $2 trillion a year. It's going down some. He's talked to Secretary Bissett. Bissett has a plan. Hey, what we're going to try to do is we want to cut government spending, which is very hard because Congress won't work on it. The Congress can't even pass the Save America Act to request a voter ID. I mean, that's just how it's dysfunctional. I mean, really, the Senate, the best comparison to the United States Senate is the Roman Senate, about the time that Julius Caesar was assassinated. I mean, it's remarkable how basically history just repeats itself. But so they're going to try to cut spending. They're also going to bring factories and manufacturing back to the United States because President Trump and Secretary Bissett are like, hey, what are we going to do? We got to do something. Trump goes, well, look, I want factories back to the U.S. What do I do? Well, they go, well, hey, why don't we do this? Why don't we look? I've got a copy of China's plan in my hand here. This is the plan right here of how they went and took all our factories. They went and took our intellectual technology. Well, we can't do that, but they also basically put up all types of barriers so U.S. companies couldn't get in there, and then they had tariffs and everything else. And so Trump goes, why don't we do that? Why don't we pressure everybody to bring the factories back here? We'll pressure U.S. companies, we'll pressure foreign companies, we'll put tariffs on. And so then they have to build the factories back here, and our economy will grow for 30 years like China's economy grew. We'll take our factories back. Their economy grew by taking our factories from us. Why don't we take their factories and move them back here? And so there's a good plan in place. Now, Kevin Warsh, the Fed chairman, he's like a very smart guy, okay? He understands markets as good as anybody out there, by the way. Very, very, very bright person. And so what he's going to do is he goes, well, look, I need to make sure that as a federal chairman, I need to make sure that the government can keep lending money, can keep borrowing money, and interest rates don't get out of control. And if I cut interest rates, that's going to help things out. But I have inflation, so what do I do? And so he's going to have a plan too. Look, one of the things you have to understand with the mainstream media, most of them suffer from Trump derangement syndrome, which is they just lose their mind if you mention the word Donald Trump. I mean, look at the reflection pool. Oh my God, they're trying to sabotage it. They're pouring stuff in it because it represents Donald Trump. Now, we've got the 250th anniversary of the United States of America. Really big deal. Everyone's going to be there, and they don't want it to go well. They want people to think America is a failed state. Now, this is kind of crumbling because we have the World Cup, and people from all over the world are coming to the United States and go, wow, this is pretty nice. You mean, oh, I had no idea things were so nice in the United States. The crime isn't as bad as they claim. And, oh, wow, what do you mean I get free drinks? You mean I get ice in my drink? Oh, this is unbelievable. I mean, it's like, wait, you're giving me these tortilla chips for free and I can have more of them if I want? And they just cannot believe. What? You mean everything is air conditioned in the United States? And so things are people are seeing what a good place the United States is. But back to Federal Reserve Chairman Warsh, he has to have a plan too. So he wants the people to continue to fund the debt. Trump wants interest rates lower, but if Warsh comes in and goes, look, guys, we're cutting rates, that's it. Well, people are going to go, these people are out of control. They're going to just recklessly spend money and then cut our yields, and then we're going to get screwed on treasuries. I'm dumping all my treasuries, and there's going to be a crisis. But if he looks like, hey, we're going to watch things closely, we're putting together these committees, we're making big changes. Oh, we're not cutting rates today. We're watching things closely here. We're going to watch out for inflation. People go, oh, well, maybe this guy's a little more hawkish. I can kind of trust him. And so the strategy I believe is going to be is, and from what I've looked at is I think they're going to try to encourage. There was a fascinating story that the press kind of ignores by Jamie Dimon. And Jamie Dimon goes, look, we're supporting the United States of America here at JP Morgan. We're putting together a $1.5 trillion fund that's going to lend to bring factories back to the United States of America. Well, at first thing, I kind of dismissed it like that's ridiculous. But the more you looked at it and studied it is, a lot of the lending is done in the capital markets. And we're seeing that with the AI build out. Google went to the capital markets. They got $85 billion worth of cash. There's rumors that Microsoft or Facebook might. SpaceX just raised a huge amount of money in the capital markets, or they're going to the private equity people, the private debt people borrowing money. Well, there's a crisis in private debt right now. But and so much of the lending the private debt people have basically taken away a lot of the business from the banks, and also the capital markets, the stock markets have as well. Well, if you want to get the banks involved back in lending money again. And the reason why this is important is if the banks are lending money, you can push money into the banking system and it's going to grow the economy, versus every time there's a crisis, you have to flood the system with money and the capital markets go up, which is, hey, that's all great for me and a lot of our wealthy clients and our savers. But honestly, to be fair, it hurts a lot of younger people starting out. They don't have $1 million stock portfolio. They don't have a house. And so they're like struggling. And every time there's a crisis, the Fed comes in, floods the system with money. Capital markets go up, which means stock markets and real estate prices go sky high. And then what happens is so you're getting, and then interest rates go up. And keep in mind, the person that just got a college, your children, they're having to borrow for their car. They're not paying cash for their car. When they're having, they probably have a credit card to maybe have some, so their interest rates go up. They end up paying for it, whereas the wealthy keep getting richer. So there's a massive fundamental shift going on at the Federal Reserve that's not well understood. And I think what they're going to try to do is they're going to try to force the banks back to owning treasuries and get away from the repo market in the capital markets and different things like that, so that again they have strong buyers for treasuries out there, and I think that's something we're going to see. And I think if Warsh can rebuild confidence, he can then get interest rates lower on the short end of the curve, which is going to help out the banks, by the way. It's going to be a huge win for the United States because we're borrowing about 37% of our money is shorter term right now. And that shorter term money, if we can drop the price, that cuts our interest rate, which reduces our interest expenses, which is about $1 trillion. So this is a big positive. So they can do that. And so I think this is something we want to watch closely and see, but there are going to be some big changes. So I think the next economic slowdown, don't expect the Federal Reserve to come rushing in, bailing out Wall Street. I think that's coming to an end. If you look at the president, if you look at the Democrats, they're headed straight into socialist land, which sounds real good to a lot of people. It doesn't sound as bad as it once did because people are like, well, look, it's very tough. So one thing we don't want to do is keep making the rich richer and richer and then putting higher interest rates and pricing houses and everything out our children's reach. I mean, I was talking to one client and I was shocked. They were talking to a friend of theirs. I guess that person had to be worth at least $20 million, that family. And they were complaining how their kids could not afford a house. I mean, think about that for a second. There was a fascinating article in the journal, which we might cover it if we got some time in the next segment, about the wealthy, the concerns about the economy and stuff are going up the wealth chain. It's not just the poor or middle class, it's the upper middle class, and upper middle class are becoming concerned. So they're going to make some big changes. Congress they're trying to pass a new housing reform act, although they're getting big companies out of home ownership. So they're limiting them to 350 homes. I'm like, wait, what is that all about? It should be like you get like 50 homes and that's it. We don't want homes to become an asset class where people own 10 or 20 or 30 homes. We want to, they can have 1 or 2 or 3 homes, but it's not in the best interest of the United States of America to price everyone out of the home market. Understand, look, why do people come to the United States of America? Okay, they want a better life. They want a higher paying job. They want to own a house. They want to own a nice home. Okay. If the United States of America, well, no one gets to own a home in the United States. Homes are only owned by BlackRock Corporation and Larry Fink. He owns all the home. No one's going to want to come here. A guy like Larry Fink, he is hurting the United States. He is not doing anybody in the United States any favors with his actions. Our country has always, from the very get-go, been built on home ownership. It started from the 1700s. People came over. Hey, I don't have a dime. I have nothing. I don't own anything in England or Germany or France. I want a chance to own something. They come here. What was it? Was that movie? One of the Yellowstone movies where the Germans all, they're like gathered around the river, but they won't go in. And like, it's hot as the dickens out. Why aren't these people going to the river? Because, in Germany, you have to have a permission from the king to get into the river. Or nobody wants that world. Nobody wants a world populated by Larry Finks. We have been a massive critic of Larry Fink and BlackRock from when he released the letter that Larry Fink was going to defund the oil and gas industry, and then threaten in states that support the oil and gas industry, their lending costs would go up. Okay, now this wasn't some random guy on X saying this. This was the person in charge of the biggest bond operation in the world. And so he was basically a direct threat against the state of Texas. The state of Texas is now suing BlackRock, and they should have to pay an enormous fine and settlement for those type of statements. So ownership is important. So we want to push back ownership down into the population. And if we can control interest rates, and if we, even with some inflation, if we can get the shorter term rate down, that helps out. That also helps out the bank lending, which will help out the profitability and increase bank lending as well. And so they're looking to change the financial system. These things are going to have bigger, longer term implications. So I want you just to understand that and understand that things are changing. And these people, again, they're very serious people. Okay, Secretary Bassett has done an incredible job. Kevin Warsh, they're making fun of him, but again, very serious people. One of the things the Fed's going to do is they're not going to be out there laying out, well, if this they're going to cut back on the forward guidance. They want the market to be a little off guard. If the market's off guard, if the market's not sure what the Federal Reserve is going to do, they're not going to go all in one way. And if something comes wrong, they're on the wrong side of the boat and they rush over the other side and the whole boat capsizes. You want people to be a little frightened. You want them to diversify. You want, at the asset committee or the investment management committee at these big firms, you want them to go, well, I think Kevin Warsh is going to do this, but we're not real sure. You don't want them going, hey, we know the Fed is going to do this. They're going to telegraph everything 6 months to a year ahead of time so we can go all in. And that leads to a destabilized financial system. So they want to introduce volatility. They want to introduce a little bit of uncertainty into the markets, because by having the uncertainty, that gives them more optionality in the ability to move to move in one direction or another and have a bigger effect when they do. And this is the way it was when Alan Greenspan. Alan Greenspan, someone famously remarked back to someone said, well, if you understood what I said, then maybe I was too clear. It was Alan Greenspan passed away this week, and it was, he was a very good Fed chairman. He believed in the free market system. It actually reached, no one could figure out what he was going to do, and so he would come walking across the street to go into the Fed building. We had a briefcase, so the reporters noticed if it was a bigger briefcase, more fatter briefcase, then they noticed that then that would cause some type of increase or decrease in rates. So Greenspan was going over with more charts and more examples to show people. So then they started studying the size of his briefcase very closely when he went across the street. And so I think we're going back to that, a little bit of uncertainty out there in the world today type of thing. And that should be helpful. And I think if they can build confidence in this, I think this will keep the shorter end of the, I think we could see the rates. I don't think right now the market thinks we're going to have 3 rate hikes this year. I don't see that happening. I think we need to see what's happening. Now, the other thing that's happening out there is we want to watch closely is, look, the stock market is. If you look at these stocks, they're not acting well. I mean, if the big Mag 7, they're not acting well. The medical sector, the stable demand sectors, they picked up a little bit. I mean, nothing is acting real well out there right now. You get good news and the thing goes up and then it reverses down. That's not a real positive sign for this market. The market, it almost has a little head and shoulders top in it. It's just, I think we got to watch this very closely. The market's seems to think rates are going up. They seem to think there's more inflation. It's been the market's been going up on the end of Iran war for a month and a half. We've been hearing about that story, and it's been pushing the market up. But there's a lot of questions in AI, and I think we're going to have to cover this after the quick break right here on the Max Out Savings Show, because big changes are happening underneath in the market. We'll be right back right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Geoca will return shortly. To speak with Ted Geoca now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
I'm Ted Geoca, and I approve this message.
Max Out Savings is looking at rising interest rates, the bond market, and our country's spending to project the impact on your retirement. They use that data to help you flex to current conditions with your future in mind. Call 713-627-0400 to learn more. That's 713-627-0400 or maxoutsavings.com. Remember, you can hear the Max Out Savings program right here Saturdays at 10 a.m. on AM 1070 and FM 103.3. The Answer.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
This is Ted Geoca, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
We return now to the Max Out Savings Show. Here's Ted Geoca.
Welcome back to the Max Out Savings Show. We're going to be talking in this next couple weeks about one of our new sponsors, Advanced Longevity, Longevity here in Houston, Texas. And one of the things we've been talking more about the show after being and managing people's retirement money for over 25 years and dealing with it, I've become more and more concerned about health and people's health and the importance of health. Health not only do you have a better quality of life if you're healthier, but if you also have you have a longer life if you're healthier. You also your costs are lower if you don't have to deal with health issues all the time. So there's a lot of positives. You can have a more active life. You can get more stuff done. It's just a much better thing. And people pay a lot of attention to their money. They don't pay anything attention to health. And it starts with exercise. It starts with taking care of yourself. It starts with eating right, and it starts with having your health checked out. And at the people at Advanced Longevity Center here at Houston, they have these scanners, these 3D scanners that they'll put you through, and they'll be able to tell you how your health is, what problems you have. I took it myself, and I'm going to talk with Steve on that here in another one of our shows. But it was remarkably simple. It took 5 minutes, and it gave me a really good idea about my health and some kind of minor things that I had no idea. Like, look, you're getting a little of this or something, and I'm like, what? I didn't know about that. And and when you can actually see the picture, it actually is like it's much clearer to you in your mind. I mean, it's like, oh, well, I can see that. And versus someone just telling you have, a little of this or a little of that, you need to do this. If you can see the picture on the screen and it moves around a little bit, you're like, oh, whoa, I didn't know, I had no idea. And this is actually real. And so I think this is something you want to take a look at. And like I said, we're going to be talking some more about this on our show going forward, some exciting things, but having a 3D scan done of your body to really tell where you are in health-wise. Do you have any potential problems? With a lot of people, I think it's just a matter of, hey, I really don't have any problems, but I do want to watch out for this. I think there's real value in that. And so it's Advanced Longevity Center in Houston, Texas, and the phone number is 844-876-5433. And we're going to be talking more about this here on the show going forward. Now, we want to touch base on these markets just a little bit. The AI is, as we've been talking some about the AI and the deep seek. We mentioned that on the show about 9 months ago. And what's happening is some of the Chinese AIs are getting almost as good as the American AIs, but the American AIs were the best. So look, if you want to develop an atomic bomb, if you want to fight a war, if you want to solve cancer, if you want to, figure out how to sit there and faster than light speed propulsion to outer space, the Claude system and that's what you want. But if you're just using something garden variety AI, if the Chinese systems are in some cases 1/10 of the cost of the American system, it's going to be a problem. And so, and in addition, as they move this compute out into the thing, and this is why we talked about the servers, Dell Computer has done a phenomenal job because people are realizing they use the Dell servers in the AI centers. But then we're going to have AI on your computer, so people will have higher power computers and do AI themselves as well. So the question is, do I need a $50 billion AI center to basically come up with my more mundane chats? Now, if I'm doing some real deep dive in the stock market or different companies where there's an enormous amount of work, maybe no. But if I'm like, AI or Aura, what are the World Cup games this week or whatever, I don't need the $50 billion facility. And so the question is, there's just so much money coming in. I mean, the numbers are about the numbers are about, like, I think 700 billion this year, close to a trillion next year, a trillion, 1 trillion, 2 and 28. This is just stupid amounts of spending. I've seen some things that set up to 2/3 of the whole economy right now is built out on AI. And the question is this all going to be profitable? The Mag 7 stocks have been falling. Why is that? Well, it's real simple. The Mag 7, you had 7 stocks, or five, really the 5 big ones: Amazon, Apple, Google, Microsoft, Meta. They're sitting around, these 5 stocks, see my hand right here. They're sitting around in big fat moats. They're like in England with a giant castle and a moat around it, and they're indefensible. Anyone that tries to go up against them gets smashed into the ground, and nobody can win. But now everybody's getting into AI. Now these companies also had a huge cash pouring in, so they're buying back stock every day, pushing the price of their stock up higher and higher and higher, because it's like, hey, what are we going to do with the money? We got so much money we don't know what to do with. We have a monopoly in our business, be it search, be it operating system in Microsoft, be it Facebook, Instagram with Meta, it just, be it with Amazon. We've got the cloud business, and we have the selling of goods. These are all great moats, and so we got nothing to do but buy back stock. Well, now all of a sudden they're all building $50-100 billion AI facility. They're all, their budgets are 150, 200, $250 billion a year for each one of these people. And so they can't buy back stock. Right now they're delisting these $50 billion a piece projects as construction and project. That's not coming off of their earnings, because it's not showing up yet. They're not depreciating them. So they spent $50 billion. You look at the company, go, wow, this company's making a ton of money. Well, you're not seeing the cost of that center because it's not in the accounting yet. And so these stocks are all starting to go down. If you look at the NASDAQ, it's been going down as well. It's the same place it was in May. It had a big run up, but the question is, where do we go from here? Is everyone going to be profitable right now? As we've talked about, look, on Wall Street, AI is like a 6-year-old soccer tournament. Everybody gets a participation trophy. That's not the way the world works. And so some of these people are going to be winners, some are going to be losers in that world. Then the valuation shouldn't be so high. And typically in big boom busts, big boom cycles, during the CapEx cycle, what happens is the stocks kind of don't do anything. They're going up some because, hey, they're going to, a new business is coming up. This is exciting. But then once the business starts coming back and the money starts pouring back in and they start making money, then they start really ramping up. Well, in this case, they're basically, the market's saying, look, everybody's going to make a fortune, so we're not waiting until the proof of concept, the actual proof that these things are going to work. We're going to give them all the credit right now. And so this is a problem. These stocks have been selling off. If you look at we look at something called the RSI, it's under 50. They're starting to break down. You got kind of a little double bottom. The NASDAQ's under the 50-day moving. This is not real positive. It's just like everything out there is not doing real good. If you look at SpaceX, let me see here. If you look at SpaceX, SpaceX came out at I think it opened at, what is it, 150? Came out at 135 if you got the stock. It opened at 150. It ultimately went to 225. It's right back where it was at 153. Now, it's been added to the QQQ, I think, early next month, which means there's going to be more selling other stocks to get it in there. But again, nothing is acting real well. If you look at ChatGPT, there was rumors that they're going to put off their IPO until 2027. I don't think that's going to happen. I think they're going to try to do it in the fall. But I think what they're trying to telegraph is the markets are weak here. if they come out now, they're just not going to get that good a price. And so Wall Street's trying to position like, well, whoa, not all these things are coming out right now, so you don't have to worry. And so to me, the market is really showing some weakness in here. We need to find out what's going to happen with interest rates, what's going to happen. The war. I mean, the war started back up in Iran this week. It's what is really going on out there, and so we'll just have to see. Now, tell you what, I think we got a caller. I think we can get Charles on for a quick question. Charles, you there? Charles is calling 713-339-1070. Okay, Charles hung up. Okay, sorry, Charles. We'll get you next time. This is our first video show, so we're trying to keep things moving along pretty quickly. You can go to KNTH's Facebook website and see us live here. So it looks to us like markets are going down. Gold is going down. Silver's going down. Oil is going down. Oil went under $70. It's just nothing. I mean, medical stocks are going down. I mean, the stable demand stocks are going down. There's just a lot of stuff going down across the board, and there really appears to be selling. And until we get an idea where this is going, I think you want to be cautious. We talk one area I still like is the 2-year treasuries. If you look at the 2-year treasury in April, where is it? Wait, bear with me just a second. There it is. It guess in March, in February, right now the 2-year treasury is at 410. Guess where the 2-year treasury was in March? It was at 440. So you're picking up about 70 basis points right now from what, so you can lock in 410 on government paper for 2 years, on treasuries for 2 years with no risk. And so after a big move like this in the market, that's not a bad place to be. And again, that's kind of adding further pressure. Back in February, March, you had much lower rates. Now they're much higher. So the question is, that again, it adds further pressure to the market. So I do believe that caution is really warranted to some extent out there. We're moving our portfolios around. We actually have a hedge on in place right now. I think this market is shifting into different directions. The Cosby sold off last week. This week that just passed, it was down 8%, and they had to close down the trading. And there was some talk that maybe one of the Blackwell was one of the new chips. The demand wasn't going up as much as they thought. Look, the problem is they're going to build enough memory things where they're going to make a fortune, and they're making a fortune. But the problem is, in 1, 2, 3, 4 years, when the demand catches up. The supply catches up with demand. At that point in time, you get your earnings cut in half, and then that's the problem with those companies. But the more fascinating thing about Korea is, and this is kind of in the weeds, but the Korean won is dropping because people they made so much money in Korea that they're selling out the Korean stocks are going down. And so the Korean currencies, they're selling, they get Korean won currency, and then they convert it to dollars. Well, there's so much demand for dollars to get money out of the country now because the markets are so high. These market caps are so massive that I think you're going to see dislocations out there, and you're seeing it in Korea with currencies and other things, because it's really becoming the tail wagging the dog. I mean, in the past, the economy was really the industrial production, the factories and equipment. Well, these prices are so high that the real domination of the economy isn't the manufacturing capacity; it's the stock market equity. When you got, I think SpaceX hit $2 trillion market cap. Now it's a great company, but it's like 100 times sales or something like. Is it going to hit there? Yep, good possibility. But what if it doesn't? You got $2 trillion of trouble there. And so, and that's really not a comment on SpaceX. I mean, you could go right down through Micron. You could go through all of these companies out there. And so I think, again, I think it comes back to what we've talked about on this show. In this world today, you really have to spread your risk out. You have to have stocks, you have to have the bonds. We talk a 60-40 split, which is what a lot of people use. We tend to use more cash. We tend to keep our bonds shorter term, which has been really the best thing over the last 5-6 years, where really it's been not a good time to manage the to be in bonds. So we kept it short term. You want to be in commodities. You want to be in precious metals. All of those, because it's a very unstable market out there right now. And there's huge profits. And the other thing that's bothered me to some extent is I come across so many people like, yes, I'm in, Apple or whatever, just name the stock that they're long-term holders. But if you look at things like NVIDIA, the stock, if you look at NVIDIA, it really hasn't really gone anywhere for a while. It's kind of in the same place. Right now it's really not much above where it was back in August of 25. And so I think people have been a little bit lulled by a good stock market, and I think you have to be careful. Anyway, we write about a lot of these things in our Max Out Savings report, which we're going to be sending out another one here shortly. You just go to maxoutsavings.com. That's maxoutsavings.com. Sign up for the free report. We just send it out. That's all we do. Once a month, this goes out. Talking about all these big issues. We try to get you ahead of what Wall Street's saying. We do an enormous amount of research to bring you what we think is going to happen. We're trying to get you what you're not hearing from other people. And if you need some help managing your retirement assets, you're retiring, give us a call. We're here in Houston, Texas. I'll be happy to sit down, meet with you, and show you what we do at Max Out Savings Advisors. Just go to the website, get our email or phone number, maxoutsavings.com, and you can request a free sit down with me, and we'll go over your financial situation. But until then, remember our motto and philosophy, which is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth over the long term. Save aggressively, invest conservatively. We'll see you next week right here on the Max Out Savings Show.
This has been the Max Out Savings Show with Ted Geoca, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Geoca on AM 1070. The Answer.